Good morning from Chicago. Sorry about the delay. It's 8:02 a.m. on May 15th, 2014. Thanks for joining and thanks for being patient. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown. Lots of input overnight. Key elements: the ECB monthly bulletin causes forecasters to downgrade their inflation outlook, citing euro strength and a weak economy. You'll see the reaction at 3 a.m. Chicago time, Central Time in the ES, with a fast drop lower. The Eurozone GDP came in at 0.2 versus 0.4%, so that's a miss. Walmart reported 110 Q1 EPS of $1.10 versus $1.15 expected. They included a 3-cent weather effect loss. U.S. Empire Manufacturing just came out about a half hour ago, along with initial claims, continuing claims, CPI. Empire Manufacturing came in at 19.01 versus 6 expected. Initial claims 297,000 versus 320,000, so slightly better. Continuing claims 2.667 million versus 2.690 million, so slightly better, and then 0.3 for the CPI, which is in line. Something to note: gold has pushed through the 1300, and reportedly it's through the 200 DMA. And it looks like the flush, when I look at a tick chart, the flush looks like it was a stop run through 1300. Currently, gold is trading 1293.30. Looking ahead, well, just now we had the 8 a.m. Net tick flows and total tick flows. Not a very significant number. At 8:15, which is in about 10 minutes, we have industrial production expected at 0%, capacity utilization at 79.1% expected, manufacturing production at 0.3%. At 9 a.m., we have Philly Fed. That's a half hour after the open. We have Philly Fed. The expectation there is 14.0. Also, at the same time, we have the NAHB Housing Market Index at 49.0, and then, of course, at 9:30 Central, we have natty gas. I don't remember what the expectation there is. I guess it's only important for those who trade that. We're expecting 98 billion cubic feet on that one. And then at 5:10 p.m. today, approximately an hour after the session closes, we have Feds Yellen at the U.S. Chamber of Commerce. Not sure what she's going to say there, but that might generate some movements. 5:10 is 10 minutes after the session reopens for Friday's trading. Looking at yesterday, let's pull up our charts here and look at what happened. So, yes, the rundown of yesterday, I posted my Evernote, my notes basically for the day, just to kind of provide to those who are watching the video, to provide some sort of an outline and maybe an idea. To do the same, it helps me keep my my read on the market concise. It also helps me keep a journal, a sort of a journal for what was expected versus what happened, and in the day following, I go over the prior day's action and compare it to what was expected. So yesterday, if we look at a short term, this is my trigger chart, a 2-tick Renko. Yesterday pretty much played exactly as expected under hypothesis number 1. The only thing that did not happen is we did not get to 81.50. We stopped 3 ticks short at 82.25. We opened, it was an open auction in range. The expectation was an open auction out of range or in range. In either case, an open auction, meaning both sides active. There isn't a driver, a selling or buying driver. We got that with the market push to the prior day's value area low, which is what we expected, and then it broke the opening swing low, went right to our first target, which was 89.25 to the tick right here, this point of control. I listed that on the hypothesis that I posted pre-market. 89.25, bounce back into the opening swing, tests the prior day's low at 92, cannot go further, pushes lower, cannot take out the low, and then tries again at VWAP, takes the low out, goes back to the open, and then we go into this chop zone here. But the key thing to note, the boulder in this foundation, so to speak, the big piece, is that it just was not able to regain Tuesday's range, which was at 92. Okay, so every test up above 92 was immediately rejected. The larger rotations are rejections on a retest of the 92. We go into this chop zone, and at about 3:30 Chicago time, we finally break. We had formed what is a beautiful profile. Look at this. This looks like it came out of a statistics histogram, a textbook. We break. There's plenty of energy here. I think 90,000 contracts at the point of control. Tons of energy. It finally breaks. Unfortunately, it did not pull back enough to retest the IB low. Would have been nice to see it pull back to 89 or so for a ride down. So if you wanted that trade, you had to chase it. The market closes outside of the initial balance, and it broke early on. Of course, we had that overnight weak low or poor low, which was broken early. It's a normal variation day with the IB low breaking, a very sharp and normally distributed profile showing energy building up, and broke lower at 130 to finish outside of the IB, as I said. Late long liquidation back into Monday's rally range. So what we've done is we've gone back to that rally day on Monday. We've basically tested that entire range down. Okay, so we stopped yesterday 2 ticks of the low of Monday, which was 81.75, just 2 ticks ahead of it at 82.25. The key gap zone now is in play. There's a key gap zone which is marked here in this other chart. So this is my 15-minute. Let's eliminate this. Here's the gap zone, the shaded area here, from 81.75 down to 75. Remember, 75.25 was key from last Friday. Okay, this is a level that came in on Thursday, and Friday tested it twice, could not break it. The next day came in, tested it from below the overnight. Actually, it opened right at it, and then tested it from above, and then it continued higher, and then we opened and we had a drive higher on Monday. So we left this 81.75 to 75 gap zone from the 13th, and we're back into it overnight, the overnight low at 81. So let's look at what we have on the overnight chart to bring us closer to formulating a plan for today. This is just, I'm walking you through the process of determining context and what the likely action will be, as opposed to just telling you what it is, because the intent here is not to give you answers, but to help you take a view on the auction as you go along. Okay? So the overnight session was very, very simple. We retested 88.50. 88.50 is that LVN from yesterday. So if you remember, we broke low. We had the 87.75 IB low, and then we broke it, leaving a key LVN here at 88.50. Remember, 88.50 was also the LVN left behind on the non-farm payroll day, right there at 88.50. That was the non-farm payroll from April 4th. That area was tested from below, and we just tested it overnight again against this key LVN, and then that ECB report came out, pushing everything lower. What we have is what we have is a weak low. We just put in an additional weak low again. We've retested again, so we have 3 tests on the 15-minute. Some blunt volume, 5,000 contracts traded just at the above low price. So this is clearly a weak low, likely to be taken out on a boxy profile. Note also that the value low is right at the low. Value low is right at the low. So this low has a very, very slim chance of holding. As always, past performance not indicative of future results. So what is the key hypothesis of the day? My expectation, because we have another 17 minutes, 17 minutes to the open, 16 minutes to the open, so I'm expecting that the overnight session will probably break this low again. It's not likely to hold here at the 81. So that'll take away this weak low. The expectation for the open is another OAOR type open auction out of range, meaning both sides active on the open, and a retest, a responsive buying back towards yesterday's close. Yesterday's close is at 85.50 towards yesterday's close, and then an expected failure, either yesterday's close at worst probably at 87 or so, and then I expect the rotation lower. I expect it to trade out this area, a rotation lower, and I expect this to start going through the gap. The target below is the mid of the gap, left behind at 78.25. That's the initial target. Overnight low being taken, much more likely than the overnight high to satisfy the overnight statistic. So on the open, expecting a push, responsive buying back into yesterday's range, failure, rollover, and start walking its way back to 78.25. Key target below is 75. Okay, 75 and 74. So the key plan for today: try to test higher early. There's the break of the overnight low, just happened. Test higher early. Fail to do so against yesterday's lower HVN, if not at 87, and then roll over and start moving towards 78.25. Unfortunately, this market has taken that trade away right now in the overnight session, with targets at 75 and 74. That's what I'm looking for. Industrial production just came out at negative 0.6 versus 0.0 expected. So that's the key hypothesis. The second hypothesis, given where we are now, we are out of range. The second hypothesis is that you would have an open test drive type of movement. So we open, push higher into the 82, 83, and then have a drive lower. Again, same target, 78.25, 75, 74. Extended target would be down here at this LVN at 67.25, CLVN at 67.25. That brings 64.50 back to play. If we break below this 75 and 74, then we have to look at this. We're going to use Friday as a template day. Friday is a blunt day, so there's some slight support at 70, but the expectation then would be for 67 and possibly 64 and a half, which is actually only about 13 to 15 points away, and that's very, very doable. Okay, so that's where we are. I don't have any words of wisdom as a closing remark. I don't want to sound like a broken record and repeat things over and over. There is no additional risk. I don't see any additional headline risk today. I feel that the market will probably move under its own power. Remember that we have Philly Fed, which is a medium tier number. It's an important number. We have Philly Fed at 9 along with NAHB. Good luck today, and I'll catch you tomorrow. Take care.